Hi guys, so this is my analysis update on DXY guys. I'm just gonna do a quick recap on on gold. So what am I expecting on gold? If you watched my previous analysis on gold guys, I was predicting gold to push to the upside. I said I think gold was around this area right here. I said there's a possibility that gold might push to my 38.2% fib level right around this area right here, because we had this breakup structure right around this area right here. That was where we had our imbalance. So I said there's a possibility that we might actually push to that level right there before pushing to the downside. And another thing is, I said in case if my 38.2% fib level became invalid, then I'll be looking forward to my 61.8% fib level, because that is where we had our last breakup structure right here. So as we can see that we had on my 38.2% level, we had this candlestick close above that level. So I knew that my 38.2% might be invalid, based on the fact that I'm not seeing big rejection around that Fibonacci level. And I knew my next target might be around my 61.8% fib level, but as you can see that we reacted around my 50% fib level. That is where we reacted and rejected from. So there's a possibility, right? And I said we might continue to push to the downside, right? So I have like an impulse, a correction, and a possible continuation to the downside, right? And I said this is how you know that sometimes you predict the market, right? You react to the market, you don't predict the market. So based on the fact that, even the fact that I did not predict 50% fib level, and we're seeing this rejection around, right? I just need more confirmation for it to actually start rejecting around that area to possibly ride it to the downside, right? And there's still a possibility that we might actually push a little before that to push to the downside. So that is why it's also good to know how candlestick formation works. It helps overall. So right now I'm just going to delete this right here and just see. I'm deleting this one just to see. Let me go to a bigger time frame just to analyze and see how it works. So this is my daily time frame right here. We can see that on a daily time frame, I'm still predicting it to at least get to my level right around this area, because we have this breakup structure right here. But so there's still a possibility we might, right? But as you can see, if I draw a zone around this area right here, we can see that that can also be a rejection area as well, because based on the pyro price action, we can see that we had multiple rejections around this area right here. So we might have that rejection for us to continue to push to the downside. So so let's be mindful that for us to maybe get to maybe around 2012 270, let's see if this candlestick will close above it, then we might get to that level, or we might just start rejecting around this area right here, to continue to push to the downside. So that is what I am predicting right now. We just have to wait and see how that will play out. So let me go to my 4-hour time frame and see. And just like I said previously as well, that that also aligns with my 50% fib level, right? So that is a possibility that we might just continue to tank to that area right here, because one, we are around my 50% fib level, and second, we are at a resistance. We are at the resistance zone right around that level right here. So we might have that level, then continue to tank to the downside, right? So that's a possibility for us to push to the downside, right? And like we said, we might still push up here, but let's see how the market reacts around this area. If I continue to see weak rejection around this fib level and a momentum of a sell, then I'll definitely ride it to the downside. But just in case we push to the upside and I see a closing candle above the zone, then there is a possibility for us to actually start rejecting around my 61.8% fib level. So that is something we should be mindful of as well. So let's go to my 3-hour time frame, 2-hour time frame, 1-hour time frame. So right now, like I said, we're still working on our previous target. So my first target I'm looking forward to is, let's see if we have some sort of like M pattern right here. And let me redraw that. Maybe something like this. Come here, reject, reject, and push to the downside. Right there. Or we might just come here, come up here, right? Reject multiple times around that area, then turn to the downside. Let's change the color of that. So that is my thoughts right now on the XY, on gold, I mean. So like we know that we don't predict the market, we react to the market. Anything can happen, but if you want to buy, right, or at least prefer to come here, break the zone, break out of the zone, break the trend line, give us a retest for some sort of like a lower high, then we might continue to push to the upside, because we should remember there is this break of structure around this area right here, which is 2050.865, around that area right here, before we might now continue to tank to the downside. But like I said, I don't like predicting way too much the future, so I'm just going to take you one step at a time. So basically, I'm still more biased certainly on a sell rather than a buy on gold overall, but like we know, the market changes. So this is my quick thoughts and bias on gold, guys. Hope you guys find it helpful. If you do, please don't forget to, and before we go, guys, remember that this is also a target right here. Maybe I should just draw a small fib here, a small line here. From here to here is also a target. Is also a target as well. So because this is our overall TP for the bigger time frame, like the 61.8, which is 1967.481, is the overall TP for the minor slash bigger time frame direction. So let's be mindful as well at that level right here. So this -27 is the minor time frame direction, which is just this impulse, a correction, and a continuation to push to the downside. So that is my quick thought on gold, guys. Please don't forget to subscribe, comment, like, and share, and I'll see you in my next analysis, guys. Thank you for watching. Bye.